Imagine hurtling down a roller coaster, heart pounding, stomach lurching, unsure whether the next twist will send you soaring or plummeting. That's the UK economy in 2024. Brexit's aftershocks rumble, inflation spirals skyward, and a potential recession lurks on the horizon. The 2024 election looms with voters desperate for a lifeline amidst the crushing cost of living crisis. In today's video, we'll explore the UK's economic prospects in 2024. But before we do that, don't forget to subscribe to the channel and like the video. The UK economy entered a turbulent period after a perfect storm of events: the COVID-19 pandemic, followed by Brexit, and then compounded by a global energy crisis. While the initial shock of the pandemic caused a deep recession, a swift V-shaped recovery followed, fueled by government stimulus and pent-up demand. However, this bounce back masked deeper issues. Brexit's impact remains a subject of debate. While trade volumes recovered to pre-pandemic levels, many argue this wouldn't have happened without Brexit. Now, red tape and checks increase costs for businesses, particularly smaller exporters, potentially deterring some altogether. Additionally, Brexit contributed to inflation through a weaker pound and disrupted supply chains. Beyond Brexit, labor shortages emerged as a major hurdle. With many European workers returning home post-Brexit and stricter immigration rules, several sectors, from agriculture to hospitality, faced significant staffing gaps. This fueled wage pressures and hindered productivity. 2023 saw these challenges intensify. While the year ended with growth, it was sluggish, significantly below pre-pandemic trends. The cost of living crisis became a major concern, with inflation surpassing G7 averages and hitting household budgets hard. Rising energy prices and ongoing supply chain issues exacerbated the situation. Despite government interventions, many Britons felt the pinch. Poverty rates increased and indebtedness became a growing concern. While some sectors like domestic food production benefited from Brexit-induced changes, the overall picture remained gloomy. Looking ahead, the UK economy faces an uncertain future. The war in Ukraine adds further strain to energy prices and supply chains. With inflation expected to remain high and interest rates rising, the Bank of England faces a delicate balancing act: tackling inflation without choking off already weak growth. The long-term impact of Brexit on trade and investment remains unclear, adding to the uncertainty. But let's see how it would fare in 2024 based on some indicators. The UK is gearing up for an election year, but the economy is facing challenges with sluggish growth. Households and businesses are feeling the strain from increased borrowing costs, higher taxes, and rising living expenses. Rishi Sunak is anticipated to call for elections in 2024, claiming success in halving inflation in 2023. However, the Bank of England has issued a warning, stating that the UK has a 50-50 chance of entering a recession. Additionally, living standards are projected to be lower at the end of the parliamentary term than they were at the beginning, marking a historical first. Looking at the economic outlook for 2024, inflation is on a downward trend but remains higher than the target. From over 10% in January 2023, it has dropped to 3.9% in November, largely due to lower energy prices. However, the yearly rate persists above expectations, making the UK's inflation the highest among G7 countries. Although inflation is expected to decrease in 2024, the bank forecasts it will stay above the government's set target until the end of 2025, continuing to put pressure on households. It's crucial to note that lower inflation doesn't translate to decreasing prices, but rather a slower pace of price increase. Financial markets are predicting potential interest rate cuts. They anticipate the bank may start reducing interest rates, currently at 5.25%, as early as the summer. This expectation is based on projections of cooling inflation and weak economic growth. Central banks and advanced economies are beginning to ease the toughest increase in borrowing costs in decades. Despite expectations of falling inflation, there are concerns that inflation could remain persistently high. This is attributed to geopolitical tensions and a tight labor market in the UK. The bank is closely monitoring signs of persistent inflation from factors like wage growth and prices in the services sector. Turning our attention to GDP growth, economic activity has significantly slowed in recent months. The latest official figures reveal an unexpected contraction in gross domestic product for October 2023. This slowdown was attributed to households facing sustained pressure from increased living costs. As we all know, the Bank of England issued a warning, indicating a 50-50 chance of recession. This risk is looming around the time a spring general election might be held, with the impact stemming from higher borrowing costs. The bank anticipates zero growth for the entirety of 2024. Rishi Sunak has prioritized boosting the economy, aiming to address years of lackluster performance. Despite the economy proving more resilient than expected to the shocks of the COVID-19 pandemic and energy crisis in 2023, the Office for Budget Responsibility expressed a less optimistic outlook in November 2023. The OBR foresees the UK economy growing more slowly in the coming years. Their projection for 2024 is a modest 0.7% growth, which is still less than half the annual average growth rate observed between 1998 and the 2008 financial crisis. Now, concerning employment, the anticipation is an increase in unemployment due to weakened economic activity and higher borrowing costs in 2024. Forecasters predict that employers will be cautious in their hiring intentions for the year. Despite the economic challenges, the UK's unemployment rate has remained historically low in recent months. This is partly because employers have struggled to fill a significant number of job vacancies, reaching near-record levels. However, the hiring demand has waned, leading to a decline in the number of job openings. The Office for Budget Responsibility projects that unemployment will reach a peak of 1.6 million people, which is 4.6% of the labor force, by the second quarter of 2025. Up from the current level of approximately 1.5 billion, or 4.2%. Due to diminishing hiring demand and a decrease in inflation, the expected average annual pay growth is around 3.7% in 2024 and further declining to 2.2% in 2025. This is a significant drop from the peak of about 8% observed in 2023. Now, concerning tax matters, the share of taxes in the economy is heading towards the highest sustained levels since Clement Attlee's post-war Labour government from 1945 to 1951. This trajectory persists even after Chancellor Jeremy Hunt reduced national insurance and provided tax relief on business investment during the Autumn Statement. Fueled by a 6-year stealth freeze on income tax thresholds, the revenues for the Exchequer are set to reach nearly 38% of GDP by 2028 and 2029. This is significantly higher than the pre-pandemic level of around 33%. Hunt is expected to announce tax cuts with an election focus in the spring budget on March 6th, just before the general election. However, he faces constraints due to a commitment to reduce the UK's national debt as a share of the economy within 5 years. Although the OBR's autumn statement forecast suggested that Hunt would meet his target with approximately 13 billion English pounds to spare, this was based on plans that included a substantial 6 billion English pounds increase in fuel duty this spring, a measure the Chancellor is unlikely to implement. Additionally, a new austerity drive after the general election was part of the initial plan. As far as housing expenses go, things are getting pretty intense. The Bank of England has cranked up interest rates more aggressively than it has in a decade, and the result? Housing costs are soaring like never before, creating a potential ticking time bomb in the mortgage market. Here's the deal, most home loans have a fixed rate, and when that rate goes up, it takes a bit of time for the higher costs to kick in. Since December 2021, around half of all mortgages have gone through this repricing thing. And guess what? Another 5 million are in line to be hit by this wave by 2026. If you're a typical homeowner whose fixed rate period ends between this summer and the end of 2026, the bank says get ready for your monthly repayments to jump by about 240 English pounds, which is a whopping 39% increase. But that's not all. Landlords are feeling the heat too. Many of them are either jacking up the rent they charge or selling off properties to cope with their own rising borrowing costs. This double whammy is causing the steepest increase in private sector rents on record. So yeah, the housing cost situation is getting real. In a nutshell, the UK in 2024 faces a complex economic landscape. The impending election year brings challenges, with a struggling economy marked by slow growth, heightened living costs, and a potential recession, as warned by the Bank of England. Unemployment is expected to rise, influenced by weaker hiring demand and cooling inflation, impacting average pay growth. Additionally, the housing market is grappling with surging costs due to the bank's aggressive interest rate hikes. The economy is at a critical juncture, and the decisions made will significantly shape the future. But here we've reached the end of today's video, so if you found our insights valuable, consider subscribing to our channel for more updates. Don't forget to check out our previous video on the UK's economy for a deeper dive into the challenges and opportunities shaping the nation's financial landscape. We'll see you in the next video.